quickly, really important that have you read this risk disclaimer. I just had the recording. This isn't the same one as the other one, but just remember that there is real risk when you trade futures and when you trade in general. So it's your own butt if you take a trade. So don't take a trade if you're not comfortable with the risk. I'm not licensed to give you trade advice. The only thing I can do is to show you what I know. But like I said, that if you push the button, that's on you. Obviously the markets are completely turned off right now, so we can't trade. So take the time to relax and take deep breaths, do some exercise, and enjoy your weekend, and study the marketplace and watch ICT lectures just like myself. That way we both can find success in this. You're welcome to rewind through this. All you need to know is that there are risks associated with trading, and if you push the button, you can lose money, and that's on you. Okay? So just read through this, pause the video, or go online and just do your own research and understand that prices can cost you financial losses. Okay? Alright, I'm going to leave that at that. So today's lecture is going to be rather short and smooth. So obviously I had mentioned that I anticipate a large range day forming on Friday. And, well, did we get that? Yep. Yeah, we got that. I wasn't interested in participating in that because the holiday weekend, I didn't know what to expect with price action because I've never, ever been this experienced with price action in my entire life on a Memorial Day. I literally found ICT a year ago and I understood how to trade price beforehand through IM Academy, but obviously they were just scamming me and trying to make money off of me, and ICT is doing it for free. So yeah, that was that story, and that's the end of that, and now I'm doing a lot better. And I actually have an idea of where price is going, and I'm confident in where price is going. My voice is a little bit scratchy, I just woke up, but I'm taking a few minutes out of my day to help all of you guys out and allow you guys to learn. So what I'm doing right now is I'm marking out my 4-hour fair value gaps because these are important to annotate for a new student that doesn't know what they're doing. So I recommend taking the rectangle tool and just drawing it out to the candles out in time as they hit them. So right here, mark it out. That way it's snapped right to it. Let's go down to the hourly chart. This, I believe, is a rejection block right here. Don't quote me on that. I have to study. I don't really care for rejection blocks. I can see them. I just don't like them. Inversion fair value gap. That's important. Draw that out on time. Like he said, we're not supply and demand. We got 2 candles. Let's go for the hourly imbalances here. So there's one right here. You see that? So ignore the green. I'm going to remove those. I'm just going to eliminate all the old imbalances that are important. They are to be considered because you can always use them to take portions. What's this? I'm going to remove this. Distracting. I am comfortable removing volume imbalances and imbalances in general. They're really easy to see. So I'm on that level. I understand that, but these new week opening gaps and these certain PD arrays are actually important to keep on your chart because you will actually understand that down the road they'll help you out. Okay, so keep those in mind and just kind of follow along. So I'm not going to mark out the fact that this is in fact a 4-hour imbalance right here, and same here. I'm just going to use them as they are. I'll change the color a little bit though. This thing is being dumb. Stop moving. Change that to gray. That way you can actually tell it's a different imbalance. I don't really. This I'm not even gonna mark out because it's pretty much the same as the 4 hour. This one I'll mark out. I like this one. And honestly, in my opinion, having 1 hour, 2 hour, 3 hour, 4 hour, 6 hour is not necessary. You can do it 1 hour, 4 hour, 15-minute, 5-minute, and you'll be alright. You don't need all that. Okay? But I know that if you were like me, you were trying to draw out every fair value gap. And I admit I was trying to do that. So don't do that. You don't need to. Just mark out the important ones. The ones that take a lot of time to form and take a lot of time to get past. And what I mean by that is you could actually see them, trade up to them, and actually have the time to navigate with them. So we're going to go down to 1 minute here. And I'm actually going to show you what I told my fiance. I don't believe I recorded this video at this time. I may have, but I think right when price was right here, it was like midnight, and I was thinking in my head that this could be the low for that day, for Thursday, going into Friday. So when Friday hit, I did not think Thursday is low. Like previous day's low, in my opinion, would not have been taken out. Let's find previous day's low. So let's consider the fact that it's Thursday and we're looking for previous day's low to get swept. So the previous day's low is right here, which don't quote me on that quite yet. No, it's right here. Nope, not there. It's 3 o'clock in the morning on Thursday. So previous day's low, the lowest price that Thursday hit was right here. Obviously we failed to take previous day's low on Thursday, meaning we failed to take Wednesday's low. So technically, Wednesday made the low of the week. If I'm correct. Yep, looks like Wednesday made the low of the week. Don't quote me on that. You'll have to go look at your chart for yourself. But I'm pretty sure that was Wednesday low of the week, which is a classic pattern, classic ICT model. So that's incredible. And then obviously Thursday did not take out previous day's low, which is Wednesday's low. So that obviously considers the bias to be bullish, especially when it takes out Wednesday's high. So Thursday took out previous day's high, created a fair value gap. You buy it, you're long into Friday, and you close at the high of the day. Because, well, for one, if you have enough experience, you're going to anticipate a large range day like this. But you're predicting it down here. So, go down here. I got the info line up. I got the profit potential that you could have made. Just to, give you that little life-changing money and just that sense of encouragement. Not to brag, not to say that you can just walk in here and do that overnight. It's just an example, okay? So if you demo traded this, you can get that experience and that moment of astonishment where it just feels like you can see it. And that's normal. It's normal to feel good, but eventually after a while, it just gets boring. And you're just waiting patiently. Like, it's not like you can't wait, it's just that it's just boring. You just gotta wait. You gotta wait for the specific time of day. So, I noticed that London lunch is becoming a thing. I was not aware of that, but I think that is something. I know. Okay, here. I'm gonna rewind. I'm gonna stop myself dead in my tracks before I go on and on about this because I don't know what I'm talking about when it comes to London. I just know London has some movement, and there's specific times of the day where London moves, and I know he said it, but I don't remember. So don't ask me. I just know that it's a thing. So I was watching this right here. So go to a 5 minute. 1 minute's not gonna tell the story very well. So right here, you throw your little tool right here. Light bulb goes off. Ding ding ding. What's this right here? Short-term high. Taken. Shift market structure. This down close candle. You want to watch that. Obviously, it's the middle of the night. The market's really just, it's not the same as during the day. There's nothing like the marketplace during New York Open. The algorithm runs on a higher time frame, in my opinion, unless we have some high impact news or war or something like that. In my opinion, it's always going to make the biggest moves during the New York trading session from 9:30 in the morning till basically the end of the day, unless it's going to be an indecisive day. So what I mean by that is if we've had large range day, and we get the movement for the week already, we can anticipate indecisive days. So a little retail doji actually appears on those days. So what I was watching right here is this gap right here, this imbalance. I like calling it imbalance. I'm not really a fair value gap person. I mean, I get why it calls that because it's fair value, but I don't know. I just like to say imbalance. It's a lot easier for me. It doesn't make it difficult to understand, but I just like it. So we come down, take these relatively equal lows right here at midnight, a little after midnight, and then we come back down again and go right into this imbalance. Looks like the bodies are respecting the mean threshold of that imbalance. Sorry, not the mean threshold of the imbalance, the consequent encroachment of the imbalance, I meant to say. It's not mean threshold. Mean threshold is the order block. So I taught it wrong for a second, but I called myself out and fixed my mistakes before it happened. So do not say this is mean threshold right here. This is not mean threshold. Because I said that, I feel like a lot of people are gonna teach you wrong, and that's my bad. I'm sorry. So it is consequent encroachment. CE. Mean threshold is an order block. Halfway point to an order block. Moving on, here we get obviously that London Judah swing up, comes down. It's like a seek and destroy. It just comes down, knocks him out, comes right back up into this imbalance. Really no trade idea right here, in my opinion. And then as the morning progresses, obviously I'm expecting a large range day, but I'm not giving my hopes up on that. I'm not gonna sit here and put a trade on because I don't have the experience. So I'm just studying price. So right here, classic 8:30 in the morning. News driver. Let's pull the news drivers up. Those are always important. Thought I'd get through this quicker, but economic calendar, forex factory. That's where you want to go. So I'm not gonna pull my forex factory over here. I'm just gonna excuse me. Get the calendar up. Okay, so on the calendar, today's May 26th. So we'll go to May 26th, apply the settings. Friday, May 26th, USD. The dollar had core PCE price index month over month. And then we also had orange folders, durable goods, a lot of news, quite a bit of news. Just one high impact and then some more medium impact like orange folders. Nothing too important or exciting. It's just news. There's nothing exciting about it. Nobody cares about the news. That's just what makes price run these PD arrays and actually allows it to deliver higher prices. if I can find my mouse. Okay, so it's your job to go to forexfactory.com and look at those news impact drivers. So as we can see, 8:30 in the morning rolls around, news comes out, market does its thing. Trades right into this. I'm not going to teach because I'm not on that level. This technically should be a breaker. So we have a low, higher high, a lower low. Up close candles, draw them out in time. Comes in, mean threshold of these down close candles, boom. Right there comes down. Like the mean threshold right here is this little whatever the heck this thing is. Or you can just use your Fibonacci. So slap it on this candle. I'm just gonna do the bodies, obviously, because the wicks are the bodies tell the story, like he says. So you get mean threshold right here. I know you can't see it because it's ridiculously long for some odd reason. I'm just gonna delete that. But yeah, just draw it on a chart, do it yourself, and you'll see what I'm talking about. So it comes down. You're basically buying into the top of this up close candle, the wick. Obviously, you can do it down the bodies, but you can't expect to get that perfect entry. So now the market is obviously taken off to the upside. This is your 4-hour fair value gap. Comes down in it, leaves it, trades up above it. You can use that as an anticipation of a market structure shift for higher prices on the lower time frame. So let's just get right into the 30-second chart because I love this stuff. So right here, obviously we're waiting right here. Does it change the state of delivery right here? Does it take out the short-term high? Does it do that? Yes. Does it come down into this imbalance? Yes. Does it leave this imbalance open? Yes. Is there a reason for that? Yes. I'm not getting into that though, but it's there. And then obviously, if you're really just not sure, you just wait for your shift. So short-term high broken, boom, turns that into basically supported price. Right here, up close candles, same thing. Draw them all the time. Boom, comes down, hits it, shift mark structure, comes back down to accumulate more long positions. Shift market structure here, here, and look what we get off to the races. 4-hour fair value gap should be this. Let's go back to the 4-hour chart though. That's a little bit too long because I can't even click auto. Right. That's interesting. So as you can see, gap right here, 4-hour fair value gap, comes back up into it. So right here, comes into it, takes off, boom, gone, off to the races it goes. You buy it up, and you sell at the new week opening gap, which is this dotted line here. I know you can't really see it, but right here's my new week opening gap. I believe that's the new week opening gap for this week too. If you go back to my videos, it should be, yep, right here. So this, oh, this one is, sorry. This is probably an older one. I'm using this one because it's the closest one to where price is at, and that's this new week opening gap right here that we had just this week alone. That's the new week opening gap right here. This is the high end, this is the low end. So these two right here are your new week opening gaps. right here. Draw it out in time. I know this is here. Just ignore that. Just pay attention to this price level right here. Get this out of the way so you can see a little bit better. Why doesn't this just fit to my screen the way I want it to? There we go. That's better. Okay. So, yeah. There you go. New week opening gap. There's your proof. You're cherry picked. Oh, I love it when he says it. That's funny. So, obviously, earlier in the week I mentioned the inversion fair value gap. We actually hit that. We hit the new week opening gap, and the rest is just, that's up to you to study. So, I'm going to leave it at that. I think that everything I've said here has basically just been a repeat of what I mentioned Thursday night when I made my video. I uploaded it and got it up on YouTube. Probably not in time for you to actually see what happened. That seems like hindsight, but it's not, I promise. So this obviously is after the fact, but I mentioned it before the fact. So obviously don't take my word for it, just go on your charts and study. But I did mention that there is a possibility that we could drive prices up into here. I wasn't expecting it because of Memorial Day coming out. But obviously it's your job to go through all this on your own chart and study yourself. That way you can understand it. But this is just a quick lecture that I just wanted to upload and be courteous and allow you guys to study from my insight and benefit from it, hopefully, and improve as a student and as a trader. So, when I talk to you next, have fun, enjoy your weekend, be safe out there, don't do anything foolish, and just try to live, a good life, and then just don't spend money on dumb stuff. Like I said, not financial advice, just enjoy your weekend. So,